All right, guys, what's up? Good morning. Sorry, I was trying to get everything ready. I'm just gonna dive right into it because I'm gonna make my cup of coffee. Camera's not working right now. It keeps freezing up. I was messing with it this morning. It keeps freezing up, so I'll have to work on it later on. All right, I'm looking at CRM. I'm looking at AMD. Oh my god! Of course, it's always something, isn't it? Let's see here. Um, CRM, AMD, and I'll get into what there were a few other ones. Like what Friday we were watching Meta. It's just hanging out that at that 50 day. We've been on this for a while now. So these are some of the things I have on watch. I just feel like crap. I needed a couple of days off. I don't know what I'm gonna do with this stream. I don't know what exactly I'm gonna do because I don't have any. It's just it this. There's just I feel like there's way too much for me to just sit here and do by myself. So I'm gonna be figuring out what exactly it is I'm gonna do. Maybe I'll just post it and trade live or just go live whenever. I don't know yet. I'm not sure. I'm not sure what I'm gonna do. So I just want to give you a heads up there because you know I've been missing a lot of opportunities and stuff because I've been just way too. Look, the camera's already went off. See, I'll have to fix it later on. I mean, you guys don't see it, but I can see over here the light and everything, and it already went off. So I got to figure out what's going on with it. So anyway, I'm gonna figure out what it is I'm gonna do with this stream. What exactly am I gonna be doing? Um, I don't know. I don't know if I'll delete the channel or not. I'm not sure. I'm not sure yet. Um, so Meta 50 day. All right, Meta 50 day. I'm gonna be looking for the 50 day to. I need to go make a cup of coffee before this market starts. We may not get there. If we get up to like 296.25 area, then maybe that's an area I'd look at. It looks like the SPY wants to turn itself around right now and start making it a higher low. So, because I had thought that the S&Ps after we got this rally a few minutes ago, when we got this here, I thought we were going to take it and just because you can see here rally, sell off, rally, sell off. We sold off, we rallied, rally, sell off, rally, sell off, rally. So I don't know. It doesn't look as clean on this chart as it does the other one that I have I'm looking at. So CRM, Meta, those are to the short side. I'm looking at AMD. It's stuck between the 100-day moving average, which it looks like today that it wants to pull back. So if we can get a retest on AMD of that 100-day moving average, would be nice. And look, it's coming up. I don't know why I have that there. So I'm gonna get some coffee. I'll be right back. If you guys have any questions, just throw them in the chat. If you could hit that like button, subscribe if you haven't already subscribed. We have 1 minute, probably 2 minutes. Yeah, 2 minutes till open. Oh, I will be watching small caps also. Small caps started going lighting up the board last week. I don't know how much. There's not going to be much this week. You get a little bit of data, but I don't think we really get these markets moving until next week. Maybe I'm wrong. Maybe I'm wrong, but we'll see. So we'll get to it here. Give me 2 minutes, and I will be right back. Let this market whip around, do what it wants to do. But I am. But CRM is my favorite. CRM is my favorite. All right, CRM is my favorite. If we get a bounce back anywhere near yesterday's or Friday's low of day, I'm gonna be looking to take that to the short side. All right, take that to the short side. Um, We have a gap fill right here. My goal is the 50-day. My goal is that 50-day moving average. 217, 216, 15. Call it. Alright, guys, I will be right back. And look, there it goes. Right off the bell, guys. Right off the bell, it's... unbelievable. Just off the bell weakness, guys. There it was. CRM short. Fuck. I need to bounce back. I don't know if you're gonna get it though. They're coming in on this. Fuck. Well, I'll be watching it. I'm making my coffee. I'll be right back. If you guys have any questions, you can throw them in the chat.
What the stock ahead of Dreamforce has either broken even or going higher. So you can go sell it right here, but I think that you watched the Big Ten on. You forgot that it was on Peacock when you watched Michigan. That's how informed you are. This was a great quarter from Salesforce. Headcount down, cash flow unbelievably good.
Margin.
Yeah, the margins were exploding, and they sell it. Okay, just keep selling it. Whoever wants to keep. Oh, now you got people saying it's Head and Shoulders. Got a whole new group who want to sell it. Go buy Prel. I mean, it's really unbelievable to me that I honestly. Now I was bedridden for most of my fantastic vacation, staycation. So I had the privilege of reading every conference call multiple times and listening to them. And you know, those who are selling it at 218, they'll sell it at 215. They weren't on the conference call. They weren't. I got to tell you, they weren't recuperating. They were playing, and now they're selling. And you know, their darn 3 cocktail every night thing, no, they don't know what they're talking about.
Right. Well, between Dreamforce, Communicopia this week.
Communicopia. I have a lot of people on a
San
plane.
Francisco's
right
got
now,
some.
I'm getting a lot of executives going on a plane
Yeah,
there.
SFO's had a bit of a tailwind last couple of weeks.
Okay, so it's very interesting to say that because I spoke with someone who's big in the real estate business who's buying everything that moves in San Francisco. And don't forget Boston Properties, which owns Salesforce Tower. They're making a major commitment. Boston Properties by the BXP breaking out here. Everybody hates it. Big mistake. Very big. It's a bigger mistake than selling Salesforce because you got a really nice yield.
Right. Speaking of another hometown company there, Airbnb is the #1 gainer this morning, going to the S&P along with Blackstone.
I went back and forth with Brian Chesky and congratulated him. Now, at the same time, we have the city of New York saying, wait a second, we're going to start giving you scrutiny. But Chesky came on Mad Money a couple times. He came on 2 quarters ago and said, listen, it's a great quarter, and high-end's doing well. And the next day, the analysts were saying, worries about high-end. And I said, all right, so they don't have cable.
Jim, on M&A, Friday was about Amgen Horizon. And then today, Emerson gets National Instruments approval in China. Are we in a regulatory détente?
I think the FTC is backing off. I have a source of the FTC, kind of Ma, who said, you hammered us so badly. And I said, look, if I go and tell my wife that, she will say, okay, so we have to adjust the size of the door, all right? So you had to go through, but the heat, there were many people. The heat on the FTC is such that I think that even Lena Khan, whom I regard as one of the most stringent anti-any combination, realized that her decision to say that Bob Bradway was going to tie product, that if you had to take this to get that, even though he's never done it and sworn he never will do it, and was ignored by the FTC, was almost just saying, Bob Bradway, you're a liar. And they had to back away from that stance. And that deal that had no competition, and it's a really smart deal. The Chinese, this could be related to, this could be an olive branch to Raimondo's trip, looking for some more Boeing planes. But this is the one that you got to watch. The big one is the possible October 30th combination closing between Broadcom, down again today, and VMware, where the only holdup is China. And if you get China, my charitable trust is buying this in part because if you get China, you got $1,000 stock. Because then they're just the AI, as it is, the reason why we like it so much is they're a great partner of NVIDIA. Now remember, I have a common theme. VMware, the people thinking that China's not going to get it, maybe that China's not going to prove it. They stuck by the October 30th deadline on the conference.
See what I'm saying? There's like all this shit to do.
By the way,
it's hard for me to keep up.
If people want some fun, I want you to listen to a Hock Tan conference call because it's so fabulously dismissive of people who ask stupid questions. It's the way that Elon used to be when people used to say, what is he smoking? Question. But no, Hock is more like, basically, you're kidding me that you asked that question.
Really?
No, really? I mean, how many times do I have to tell you that I'm not going to answer that question? And yet, his confidence that the deal may close, it was exuded on the call, and I think that that's the big deal. That's in front of the Chinese. It's gotten approval everywhere. And VMware and Broadcom is a tremendous combination to onboard and then to do AI with Jensen.
Yeah, there's a big deal coming out of the quarter and the call, as you said.
I love the quarter, by the way.
Yeah,
there were 9 price target increases, but the stock had run 40 the day before, then down 35.40, then down as much as 50, down again today by people who don't realize that it's 20 times earnings, has a 2% yield, and you're going against Hock. Now we've met Hock Tan, and I mentioned earlier going against Larry Ellison. And Larry Ellison was, he's Brady. Hock Tan is, in his own way, Mahomes, which I hope I can see on Thursday.
Hock and Jensen.
Yeah.
Are Brady and Mahomes.
Oh, and by the way, Jensen, just the delightful speech he's made in Japan. And to study what Hock Tan has said about Morris Chang, who started Taiwan Semi, and there's a great cartoon, but they're great friends. Morris Chang is the dean of the Will Make the Foundry. You sent us the design.
Yes.
You realize I need people to study this man. You need to study Jensen because he is Da Vinci. He is the great creator of our time. And when I was out there last, other than the fact that he gave my second dog a pass to get in
That's
after,
right, yes.
after
The
Vinny
building
passed
pass,
away.
yes.
But he was most proud of the fact that he was able to grow grass on the sides of the walls. And he had been the architect for the structure. There's nothing that this man can't do if he puts his mind to it. And his easy way with Modi in India was a sign that this is an American ambassador. He's the great American ambassador. Oregon State, the same year as
Told you. Small caps have been. What the fuck is J.P. Morgan doing over here? Really?
And I think that the bright lights of Oregon State. Watch out, Oregon. Watch out. You know that Nike money's going to run out.
Exactly.
But the money from NVIDIA and from Fortress, I think, if they commit, will never run out. They can make that school the one that we want. Well, it's always a great school. My daughter was part of the state system. Loved it.
Yep, we have Colorado right here as well.
What a game.
Yes, I know.
We haven't mentioned Dion.
Not yet.
No.
Not yet.
Jim Cramer is such a goofball.
Dion Sanders.
Jim, on the UAW, I know your concerns. You've articulated them several times. President says he's not worried over the weekend.
Well, why is that?
Adam Jonas says, even if you are worried, you got to buy GM and Ford in the face of these talks.
Well, GM doesn't have the strike. I think the money put away for a strike that Ford does. I greatly respect Mary Barra and I greatly respect Jim Farley, but the head of the UAW, Shawn Fain, if you read his speeches, it's very much, and I went back to see when it was like this. You have to go back to 1950 when you have such a strident union leader who basically is asking for $60 billion. Some people say $80 billion. And Farley's is talking about maybe $5 billion for Ford. You can't. There's a lot of people who say, listen, labor is not a factor in the end. It's only like 2% of the cost. Those people just really don't understand what's at play here, which is that if you don't get those fall cars and trucks out there, you're going to have cash flow issues.
So you're not worried about some kind of union-led wage spiral in the country. You're just worried about shutdowns.
Yeah, no, there can't be unions. 20% of the workforce, they're not a factor. But they are a factor with this group. And, at what point you have a union president self-proclaimed? At what point can Ford say, you know what, talk to the hand, we're going to Guanajuato, we're going to Puebla, you're out? Does it get to that? The answer to that is probably up to the president, not up to Jim Farley, not to Shawn Fain. So I think the fact that he's not worrying about it, I love confidence, but, we're about to go in the football season. Andy Reid's a good coach, and I've known him for a long time. The one word I would never use is confident. Confidence arrogance. How about focus?
Right.
I think he should use the word focus. And I'm obviously not his advisor, sub rosa or whatever. I haven't spoken to him. My wife spoke to him like 10 years ago. I haven't spoken to him in a long time. But to say not worried is kind of a jinx.
Yeah. Obviously, the shift to EVs, there's all kinds of headlines. This morning, Germany, Jim, Schultz says they're going to be the first European country to require 80% of service stations have a charger. The
biggest worry in this country is will New York, will Illinois, will California say, you know what, we're only going to allow 50% internal combustion engines. It's rogue states that they need to worry about. Now, one of the battlegrounds here in the UAW is the battery factories, because the Ford battery factory is not owned by Ford. So they want Ford to come in and say, listen, we're making unions, we're putting people, they want more people to work. They had a 30-hour work week, which what the work from home people who are 26 are using.
Yeah.
Those are the people who have their thing always on, but, I don't know, so maybe Take-Two Interactive as something that allows you to. But I do think that it's just nuts to think these battery companies, ownership.
Meanwhile, we mentioned the Saudis reportedly extending their cuts. Jim, rig downer every Friday. Here, bumping up 85 last week.
I talked about my and my Terra owning Oracle. Good. We own Pioneer, and because they have been Sure, the other one was like, what? This could have 50% nat gas though. They've been drilling more. They've been drilling more, getting more, using fewer rigs. Okay, so these smaller, closer thing. Coterra is using 3 mile now, 3 mile sideways rigs. So you're hitting a lot more oil with fewer rigs. And Pioneer, by the way, is by far the best. They got the lowest oil in. What you want to do when you look at oil companies is you need to see who's got the lowest oil in cost. And the lowest oil in cost was what Scott Sheffield came up with.
Well, I kind of missed that one.
Rich Dealey, who's terrific, the CEO. They have the lowest oil in cost of oil.
Man, so you have VERB, you have Airbnb. There's a lot of things going right now. A lot of things going right now. Hold on. Sorry, I gotta stop doing that. All right, so you have Airbnb. So Airbnb is getting inducted into the Hall of Fame. The S&Ps are selling off like I thought they would up here. I thought the S&Ps would. That was my thoughts, that the S&Ps would sell off up there. What? Come on.
ATXG and Tax launching strategic negotiations with Lilly for advanced lithium battery integration.
I'm not ready for this morning. I really am not.
Vehicles, that's Alpha Tango X-Ray Golf, ATXG.
So there goes the S&Ps. So VERB, Airbnb, right? Airbnb is going to get bought up throughout the day because they're going to from what I've seen in the past, they get bought. They get bought to add it into portfolios if they're more underweight in them, so that they can compete with the S&P, right? It's just something that, and let's see, VERB. All right, so I'm gonna look at VERB. It's halted again. Guys, be careful with these. Like I said, they've been going nuts because there hasn't been too much. I mean, I've just noticed that they've been starting.
INSM Insmed hitting new highs now, up about 15%. Remember Sandy Michael? The company earlier announced results from its
This looks. I just don't like this though. I don't like that. See if it rejects here. See if it rejects. You should see this thing pull away, and if it does pull away, see if it starts rejecting in this area, and if it does, that should be a sign that it's not strong. But that's just how I would look at it. So far, it's a bounce off of VWAP. I don't like the amount of volume that came in there. You want to see a lot of volume come in on this thing. Just came across the scanner, so there's probably more people looking at it if they haven't been looking at it. I need to I'm going to let the market find its footing. I'm going to be patient this week because we have a lot of data coming out next week. I will be it's a short week, so I kind of want to wait and see how we do today, see what setups we have. What was the last one I was just at? Shit. VERB. That's what it was. think there's another one here also. Look, the SPY's just weak.
Employment trends index for August. Durables ex defense for July.
Shit. See, there's so much going on, guys, that I'm not prepared.
0.5% expected.
SSU.
E-share resumes.
Yeah, it's not. It keeps freezing up, man. So I had to. I'm gonna have to mess with it after the stream. I had it up. It just keeps freezing, so I have to go back, turn everything off, and then reset everything. It's been giving me problems with freezing. So I said I'm not even gonna try with it because it's just gonna freeze on me. But the thing is like this morning I did try. I did try this morning and it just kept freezing on me. So I have to go back and just set the settings off and everything. And I hope you're feeling well. Hope you're feeling better. So if you guys are curious, my thoughts on the S&Ps is that we do get back down to here. I'm looking for the S&Ps to get back down to 443. It's just what takes us there, right? What's the reason why we get there? From where we are today, remember, we pretty much did that in one whole day.
Pound hitting $1.67 where it was halted again, up 133%. BERD.
It's up 133%. Wow.
Coming up at 10, the CME employment trends index for August. Durables ex defense
Why
for
is
July.
Sorry, I was trying to take a drink of coffee. Didn't get my coffee until late this morning. I want to see what this thing does. I want to see what VERB does. I might take a shot on it, but I need to see the volume. I need to see this thing. I want to see what it does. I want to see if it comes out of this halt and halts up above this previous high. Let's see if that happens. Let's see where this thing comes up out of the halt. Oh, nice. That's what's up, man. Awesome. I'm starting to feel a little under the weather myself today. That's why I'm kind of not. I'm not in a hurry to like rush in and get into anything. I want to let some of these things come to me. Like, I was watching CRM off the bell. It sold off. I'm not sure if it's still down there or not. So AMD is still. Let me see here. Let me get
MA MasterCard said it's not raising interchange rates in the U.S. this fall, has no plans to do so. That's Michael Alpha.
All right, so MasterCard said they are not changing their rates. Okay. Even though that was older news. Did you guys have a good holiday? Well, you guys, depending on where you're from, did you guys have a good weekend? Did you guys have a good holiday weekend? This morning, my top watch was CRM. I was wanting to watch AMD to see if it held that 100-day, but it hasn't. So now AMD is under its 100-day, but I would watch because Intel is ripping to the upside. So not sure what's going on there. Come on. Today I'm going to be honest. I'm going to be patient. There's not much data this week. I'm going to be watching probably small caps. Right? Looks like Nvidia's trying to do something here. There's their turnaround on on Nvidia. I would watch the Qs. Unless it's going to get that bounce. It's got to close below this area. I'm honestly I'm gonna just let things happen today. I had CRM. That was my #1 watch today. CRM. It's just hanging out. I wanted to get a short up here, but didn't happen. It just sold off at the bell. I wasn't ready. I had time to get it, but so I want to see if we can get CRM back down here to this 50-day moving average. All right. This 50-day moving average is going to be about like 216.50, 217 area. And that would be a swing trade if I get the opportunity. Like if CRM like if we are able to get like a bounce back up into this area and you can't get above 220.50, 220.75 area, right? You can't get above yesterday's close, then I'm going to look to be short that. And I feel like people are trying to short it also, but they're not going to do it here. Right, they're at least up here at 220.55, 220.50 area, but that's long gone because you had to be on it on the open. So CRM was my top idea. I think I put it on Twitter. I'm not sure if I did. I may have deleted it. It had an early sell-off this morning. It kind of wrote itself down. So we'll see what happens here. Just something to be patient with. It's not giving you much momentum. So the S&Ps are still kind of just sitting in this $1.50 range also. So I'm going to watch AMD, CRM, more right now VERB. It's halted to the upside right now. And look, guys, it halted up above that high, and there it went. And it's halted again. See, I knew it. I had a feeling this thing would halt up above that previous high. So, I'm kind of just being... I had calls this morning. Oh, wow. Yeah, it has been going. And natural gas has been going, too. It's been bearish for quite some time now. I think when I first started this channel, I was talking about natural gas and how it was setting up to go to the long side. I mean, that's where, you're getting dividends, you're getting all the signs are pointing there, right? That we could see this next stage in energy. That next leg higher in energy. I have nothing on energy, and we've been talking about energy for a while, and I don't have anything on it, even though I should have had a piece out. So I'm gonna figure out tonight, going into tomorrow, this week, I'm gonna really figure out what it is. What am I gonna want to be? Where am I gonna want to be positioned this week? Or this month, right? What am I going to want to do this month? XLE looking like top. So yeah, VERB right now is where your volatility's at right this minute. Like I say, guys, I still feel like from Friday, from like, when I wasn't feeling well, like I have a sore throat right now. I can taste the coffee. It's not like it's COVID or anything. Yeah, I can taste that coffee. I mean, I hope it's like not just starting now, but I've been getting really wore out, man. You guys have no idea. I've been getting so tired, and it shows. I'm like, man, like because a lot of the stuff that I'm trying to get done here. Like there's a lot of stuff that I'm just working on outside of just doing this, and I'm just like I'm getting so exhausted. I'm getting frustrated. Oh, the other one, Chris, was Meta. We were talking about that one Friday, and I don't know if I put on a position on that or not. But Meta is up there at its 50-day moving average. See, it's just been getting clear rejection. We've been noticing this for quite some time. At what point does it just, you know what I mean? Do they just let go and bring this thing down to 290? But I feel like it's going to take something, right? It's going to take a piece of news. Like, does that news come Wednesday? We don't have much data this week. So I'm kind of just going to be like picking my spots here. This week could be really boring, and I hate to say it, but it could be. Could turn out to be a boring week, especially if you're not, if you don't know where if you're not in the right areas. So I'm gonna watch VERB for right now and CRM Meta, but those larger cap stocks, like tech stocks, I'm not sure if we're gonna get like big movements today. Oh, what the hell's going on? So, what do you have on watch, Chris? Did you guys have a good weekend or what? How was your guys' weekend? So 449.50, call it 449.50 on the S&Ps to 451, we'll say. So we've moved $1.50 right now in the S&Ps. We've moved $1.50. Here's your July factory orders just coming out. Minus 2.1 for July factory orders. It's still crazy. We're still getting these 3 months and 6 months over 5%. Isn't that still wild? Total vehicle sales. What the heck is going on here? My other computer is just flipping out right now. It's going crazy. COP, yeah. I was honestly, I thought about this yesterday. It's why I didn't do a watch list, and I took a couple of days off. Was that I didn't feel like we had enough news last week to. I feel like we didn't have enough news to carry us into this week, right? There wasn't really much, and I'm like, so I've got Meta at the 50-day, I've got AMD at its 100-day, I've got CRM like trying to get to its 50-day. But there's got to be something to get things to move. And it's really not until next week, guys, honestly. We do have some data tomorrow. ISM services tomorrow. That could give us a little volatility. You have Redbook, balance of trade, imports, exports, and stuff. But really ISM services. And then we have... I thought we had Fed Beige Book. There it is. So Fed Beige Book also at 2 o'clock. And that's really it for this week, unfortunately. You know, you do have your labor report, your initial jobless claims. And initial jobless claims, right? And unless initial jobless claims and this ISM data comes in, like, that's where our volatility is going to be. So this is, if you don't know, like, you have to understand those type of things, right? It's a holiday week, or it was a holiday weekend. People are probably wore out. I can feel it. I didn't do anything but really, like, I didn't really do much but watch college football. And I'm just like, I'm really, I'm just, I can still feel it. So, you want to know, like, if there isn't much data, or if there isn't really, it's not like there has to be like a data set. You can have, random news pop up. You could have a bank come out, and another bank or two, and say, yeah, we got to do an offering. Or we want to try and do an offering, and then the next thing you know, the government's taken over because they said they wanted to raise some capital, right? So we'll kind of you just gotta have to be patient, and that's why I feel like you're starting to get things like this, right? Starting to get things like small caps starting to move around, because this is other places that traders are going. Did my stuff freeze? Is this thing 6 shares at 320? What's going on here? $3.20. Hold on. The time in sales was frozen. Oh yeah, Conoco. Nice job, man. Nice job, Chris. You're in the right area. I like that. Very nice, man. Congrats. Congrats. Wow, look at ConocoPhillips, man. I missed this one. I still have some positions from back in 2020. And I was just watching something this morning where, there's, where this individual was pretty much showing a chart that everyone is pretty much left energy. What happens if people come back, right? Positioning is pretty much left. And here they are, still up here at high. So this was a good grab. Like I said, on this dip and this dip, see, Conoco looks a little different than. So, yeah, actually, I'm sorry. It was right around here, right? Bouncing off the lows, like towards on the lows. I bought Oxy Diamondback, which would be FANG, would be the ticker for that. One Oak, a little more so heavier than into Oxy. I bought a ton of energy stocks. Bought a ton of them. And, man. Yeah, see how I put in that double bottom? I remember sitting through this, like, man. You know what I mean? The idea, I've been sitting on this, and it's just been red and red. Right, now I'm down money. I never sold it. Never sold it. But there comes a point when you have to. Right? There comes a point when you have to, when you've gotten all the when you've gotten a good amount of interest, and then the stock itself is up over 100%. But if you look at ConocoPhillips, that Chris just brought up, you could have gotten 50, or I mean not 50, but 200%. It wouldn't have been very hard, buying at these areas, sitting at $30, $25, $35 area. Hell, call it 40. To have way more than 100%. Right? That's why I've been looking at more so these names like Rig, Transocean. You guys have probably heard a lot of people talk about it. This is one of the ones that we've been watching. Look at this break out. Look at this break out of the pennant. And I told you guys about this thing back here. I brought this up way early. Broke out of the pennant. And it's holding the 50-day. Right? It's just holding this 50-day right now. Boom. All right. If I don't know if it makes new highs, I'm kind of worried. I feel like energy's. Everybody wants it to go up. It could, but I'd much rather let it show me what it's going to do. I've already missed that boat. I didn't set myself up here for that swing trade, so it is what it is. All right, there's a second try at it. So if it breaks up through there, though. Oh yeah, what is that? Is that a small cap name? You said Hall, H-A-L. Oh, energy name. Yeah, Halliburton. That's right, Halliburton. Yeah, you got to, man. You have to, because when things go sour, they could go sour quick, and they could get there. They can get they can sell off in a hurry. And look at the volatility on that. Look at the volatility on Halliburton. It is oversold. Or, I mean, overbought. This thing's pretty overbought. I would expect some downside to come in here. I mean, longer term chart, I'd look for this thing to sell off. Right? You have a flat top, that flat top up there. But this thing sells back off, maybe starts meeting the 100-day and 200-day moving average, right? And then what if it curls itself back up to go higher? Or it's done with. That was the run. I don't know. But just looking at the daily chart, low volume, RSI pretty extended. These RSIs are putting in lower highs. Look at this one from back here. This thing back here is at 80 some, right? Look, double topped up there at call it 80, 77, right? 75, 72. Where's our lower high at? Right, 70 or 69, 70. Is that going to be our lower high? Is this the lower high where we're at? Right, and then get this thing to pull back. So maybe we might want to be short. Maybe we might want to be... This is why I'm thinking short energy. I'm not going to just go out there on a limb and short it, but this would be a name I would short because of the volatility it's proven to me that it has. You'd have to obviously get 3, 4, 5, 6 months on that, but if you're playing options, but I would be careful. I would much rather just short this thing than anything else. Of course, I'm just saying that without looking at, premium and whatever it is that the borrow cost is, if there's a borrow cost. But
Diane, do you think there's going to be a data set that ends up being more convincing to either the Hawks or the Dubs than we've gotten so far?
Not before the meeting in September, which is why they're willing to stand on the sidelines.
that's crazy.
They probably will skip November, and this is the peak in rates. But the higher for longer message really.
All right. And tonight, I have a newsletter that I was making over the weekend for college football. Doing pretty good over in college football. 3-0 so far. Notre Dame, James Madison, and Nebraska. Pretty happy with the way the season started. The season started for college football just how it left off. And I thought to myself, until Clemson proves itself, don't try and get cute. And this is why you don't want to get cute, right? I got in front of the camera, I think, Saturday, and just put out some stuff. I put out some content, and, I'm like, I know this whole time, I'm sitting here saying, I'm putting it out on YouTube that I like Clemson, but I'm like, the other part of me was like, why would anybody take Clemson? Why should you take Clemson? Why would I say Clemson? Right? Because it's this prior expectation of what used to be. Right? Until that part of Clemson comes back, you got to take it for what it's worth. They had Duke had 19 starters coming back. They played decent ball. Clemson couldn't even hardly get past Boston College, and you've seen what happened to them. Of course, their star quarterback and running back, I think, went off to the NFL or another school or something. But until something has changed, don't expect the change, right? Until something changes. Now, Colorado was the only difference. The fact that Colorado and TCU, right? There was change. There's a whole new freaking team. And then look what happened. Things changed because there was a change. So, I don't know. We'll see after week 2 how Clemson, bounces back off of that. It's tough to go to play an away game at night, your first game of the season. So, I would expect that Clemson gets undervalued, and there might be a value spot there. I'm still not sure in the future, so I would look at that. But let me, I'm going to go make one more cup of coffee, and then I'm kind of getting woken up. The SPY still is just stuck. The S&Ps are just stuck right now. Maybe we get a little more downside. See if we can get back down here and then bring it back up and kind of get up into this area. I got to go through more charts and do some stuff. It's like, I feel like I don't have enough. I feel like there's just too much that I'm trying to take on from one person. VERB looks like it might start falling out of bed, but I'm going to keep this on watch. Well, that's really all that I have, guys. Is like watching some of these names that are at their major moving average, like Meta. AMD's at its 100 day, or was. I guess it broke it, didn't it? Wow. So it broke it. Unbelievable. Well, there's one I missed out on. And there goes the SPY. So, and that guy backed up exactly what I said. This guy on CNBC, here, let's listen to it. I literally have been saying that also. I'm literally saying the same thing.
Probably 4,100, 4,200. Remember, on any given calendar year,
right here,
we typically have 3 7 to 10% corrections. We've had 1 so far this year. It happened in February and March. It was 9% peak to trough. We're due for another one, and I think Diane's right. The key here about recession or no recession is the consumer and labor, right? And remember, labor starts to deteriorate about 23 months after the Fed starts its hiking cycle. We're 19 months in now, so it's right on cue where it should be.
Wow. I'll watch some of those numbers.
He said, wow.
It's great to
Come
have
on,
both of you
Carl
guys.
Quintanilla.
Good to see you. Thank you.
So he said the labor market doesn't start to deteriorate until 23 months after the hiking starts. Well, he's saying we're at 19 months now. Well, I've been saying the same exact thing pretty much. A year into things starting, right? I mean, you can look at it at a couple different ways from when they stopped to where they started, but looks like we still haven't really had employment numbers really jump up either. But I don't know. That's what I've been trying to say. I've been trying to say the same thing for the past freaking 6 months. Yeah, what's up, buddy? How you doing this morning? I don't know if there's anything to get. I don't know what, I don't have anything this morning. I just feel like it's a short week. We have no data. I was looking at CRM, Meta, 451, 449. So we moved $1.75, $2 in the SPY. I feel like it's going to be a boring day. Okay, so here we go. VERB, guys. All right. I want to see this thing hold. There we go. Nice. Here we go. I might start thinking about a position here on VERB. What time is it? It's 10:20. $172. Be careful playing these guys. Set a stop loss. Keep your size down. The only thing that I'm worried about is that you don't have, because you had a gap. You had a halt and a gap above previous high here, right? So it's not like you had a breakout in volume, but you still have that increase in volume. It's selling's picking up. Let's see how this thing acts. I'm gonna watch it. I don't know if there was any news or not. Chris, you take care, buddy. I might work on this newsletter around lunch. I might work on this newsletter at lunchtime. It's because it's a holiday weekend. It's a short week. It's a short week. It's a holiday week. We don't have any data to move us around. And I said this like a while ago, was like, how much more can the SPY move? We've moved so much every day. Right, and I'm like, this thing's just getting rinsed out and drained. Like it's gotta breathe. The markets have to breathe a little bit. It just takes a lot. Like the markets have just been going absolutely crazy for the entire summer. The entire summer. Come on. Why is this thing messing up for me? But yeah, it's we're chilling because the markets have just been going absolutely insane. They have. I mean, look at these candles. Since the start of summer, guys, 431.85, call it 432, 437, right? There's $6. Look at this candle. Look at these candles. Look how long they are, right? Every day you've had a decent amount of movement. Bang, look at that one, right? I think we sit here until we get a data point, right? So right there's our support. 449 support. Where would we look for a rejection? Look for the high a day. KERN. I'm not looking at that thing. So there's just no. You're gonna have to. We have data tomorrow. We have some data tomorrow. AMD actually put in a move, surprisingly. So maybe today will be the day I'll be able to make this newsletter for week 2 of football and week 1 of NFL. See if AMD can come back up and retest this 100-day moving average and have it act as resistance. I kind of expected this. This is why I was kind of like, I don't know if I really didn't, I didn't make a watch list last night. I didn't, I was contemplating having a live today because I know how these days are. Let's see. I'm gonna go make another cup of coffee. I'll be right back. What the just happened? All right, so there's the S&Ps. If you watch this daily chart, you're going to start seeing, like, if I throw up a 3-minute chart and I throw up the S&Ps, all right, it'll make it a little bit more easier for you to kind of see what's going on. That's why it can be important for you guys to have a few different, have a few different time frames on the same thing on the same chart. I'm trying to get my screen together, guys. Nice job, bro. Nice job. Yeah, I mean, you technically could have room all the way up until 451.19 area, right? You could have room all the way up to Friday's close. All the way up to Friday's close, which would be up here. I'm going to go get a cup of coffee and I'll be right back. I like that. I like that idea on those calls. Let me see here. I feel like we want to roll over a bit.
Popping here to new highs now on heavy volume after resuming.
What is it?
HSDT. Sandy Delta Tango Company earlier this morning announced that it was now compliant with all applicable NASDAQ listing criteria. That's HSDT and shares.
The longer this consolidates up here, man, that sucks. Turkey, come here. I'm gonna go grab a cup of coffee. I'll be right back, guys. Alright, I'm back. Sorry, team. Sorry, team. I know I probably lost viewers. That's not the goal here. So I think I might do a show on this weekend about college football at 12 o'clock. So VERB looks like it's breaking down. So I need to work on some things. I need to get like some background, and there's like a lot of stuff I got to do. Well, okay. So the S&Ps did not want to get above that 450. You know, I have not attacked the SPY in quite some time. I have not attacked it in a while. Like, I could tear this thing to shreds. I did it early when I started this channel, and I feel like I shied away from, you know, we're still in this range here. VWAP is headed in the down direction, and we are underneath the VWAP. You need to take all those things in the consideration when you're looking at charts. Like, is VWAP like sitting, like, is it just sideways? Is it going up? Is it going down? Are we above it? Are we below it? All that fun stuff. See if we take, see if we make this area here at 449.75 rejection. That would be the next area I would look to. I'd look to get to there. Honestly, I feel like, because that's a V. Look at that V top, right? So you notice how we just rallied all the way. We rallied all the way up to pre-market lows, just above it. Right? You rallied, and then what happened? You immediately just took it back. Immediately took it back. So, but you are holding firm here. We have some volume that's coming in, trying to come in. I want to clean my little girl's litter box real quick, but I would leave you with that. I'm coming, sweetheart. I'll open the window. So I think she wants to open me to look out the window, or open the window for her. So, yeah. If you guys could hit that like button. I'm sorry it's such a boring show. I know I don't have the camera on. It'd be greatly appreciated. I'm gonna try and not let my my thoughts get in the way of what we're trying to do here. So I was ready to call it quits this morning. I'm telling you guys, like Friday when I haven't watched the video back, but Friday I was like I was unconsciously like awake, alive. I was unconsciously awake, or alive. I mean, I was so done. I like by Thursday, Friday, guys, I'm so done. I swear to God, I get like 3, maybe 4 hours of total sleep at night, and it's, you know, 5:30, 6 o'clock. It's on the go until 12 at night. Right, and it really takes a lot, especially because there's so much to do when you try to do this stuff, and trying to do it by yourself and not having a team. So I need to get a team together. You guys can email me. My links in the description if you guys want to start something. I'm just gonna continue to keep trying. You know, I've been doing this for a while. I feel like, you know, I see a lot of other people out there. I'm not taking away anything from anyone. There's only one person that I know of, and I'm sure there's many out there, so don't get me wrong when I say this. There's really only one other person that I personally know of or seen out there who I would say is, like, you know, one of the best traders. But it's in a different kind of way too. It's not just like, you know, it's like being able to like listen to a conference. There's just a lot, you know. He's a person that's been in this business for a long time, and, you know, worked for Lehman Brothers and stuff like that. Back when they were reputable, you know, when they were a reputable brand. So I would look for that. So we know where we have support, right? Support's at 449. Let's see what happens here. We feels like we came up. We're not breaking through that gap. You're going to need a reason to break up to that gap to get to new highs. We're going to need a reason to do it, more than likely. Do we get back into this? Do we get back into this area here? Feels like we might want to test that 9 EMA. Whew, that was close, guys. I almost got rid of all my drawings. So you have your, see how we're curling up here? Let's see if we start to try and get down here to this 9 EMA. Hey, Turkey, I love you, but you're shaking my monitors. CGC's going. Oh, that's right. We did have MSOS, like MSO stocks. It's okay. You want me to open the window? You want me to open it? She's so mad at me right now. CGC was just on the scanner. Alright, so this thing's going again. This thing went Friday. This thing rallied its ass off Friday, I thought. Huh? No, Canopy Growth definitely went wild one of these days. I know it did because I looked at it. And it was ripping right there. Okay, so it was Thursday. So Thursday is when it went on its run. There it goes. It's going again, guys. CGC. And today it has just as much volume. Let me turn this on. I'm just going to open this window for her real quick. Give me 10 minutes, 5 minutes. I want to go clean her litter box out real quick while I have her sitting here.
For the third quarter of 2023, in part due to the strong performance of Barbie, as well as incremental impact.
And if you guys have tickers you guys want me to put up here, you just let me know. You guys just let me know and I will throw it up for you. Did y'all hear about did y'all see the video Dom in a Year? I'm gonna have to put that in the title. Dave's sitting there trying to lay people. Dave Portnoy's laying people off, and they're trying to get him to hire him. I mean, I agree, you know, but if he's got the money, but it ain't the time, bro. Must not know what's going on because shit could get real rough here soon.
One of these negotiations, have we heard one of the pay TV providers say that it's possible for them to survive ESPN and network like ABC without those Disney networks? So I think this could be really different. What Charter is really focused on right now is they would like to offer to their subscribers access to Disney Plus without charging them extra for it. And they don't want to have to pay Disney extra for it. And their argument is that Disney is offering a lot of their content on their streaming platform, and they want to bundle it in. But Disney is saying, hey, on Disney Plus, you have the library, you have all these old movies, you have so much additional and exclusive content on Disney Plus. They're not the same thing. So right now, that is a key sticking point, and we'll have to see if they could resolve it before Monday, Carl.
Wow. Julie, thanks. Talking a bit, Julie Borston today. Let's bring in Michael Morris, Guggenheim Securities Entertainment and Media Analyst. Michael,
all right, so there's that double bottom we hit on the S&Ps that we literally just stuck one more time. This is all support. See if it starts becoming resistance here at 449.85, where we said right? See if it all starts becoming resistance. This was all support. See if this starts to become resistance. I'm gonna go clean her litter box real quick, so give me just a couple minutes, and I'll be right back.
You really are getting close to what could be a tipping point for how consumers receive content and sports content in particular for the rest of the future, if you will.
Does it feel like mutually assured destruction? Because I've seen some estimates on, for example, what would happen to Charter's revenue, assuming that, say, 10%.
Looks like AMD's reclaiming that 100-day moving average, but it did just make the low. Man, it's tough.
I think mutually assured destruction is a good way of thinking about it. I don't think it's full destruction, but it eliminates a very meaningful part of economics that could buoy both companies during a transition period from a bundled world and a linear world to a streaming world. So we all know that streaming is the future. We see it in cord cutting. We see it in more content being made available. And from the point of view of the distribution company, like a Charter, there is more and more usage of their broadband service, which increases its value. So there is a lot of value being created at the same time that people who have been overpaying for a service or services that they don't want are taking that money out of the system. So this dispute is really about how do each of those legacy companies participate in the economics of the future business model, and it's really going to be important for how contracts are established across the entire industry for the future.
I mean, it really is not your typical carriage fee dispute. So how do you expect it to shake out? Do you think they're going to make a deal?
I do think that they will make a deal. I know that I might be, I don't know if I'm in the minority, but it's certainly debatable. But like I just said, and Carl hinted to, there is a significant portion of each company's near-term economics that they will be giving up, right? Disney generates a significant amount of revenue from their pay TV distribution partnerships, even as cord cutting continues. And Charter generates a significant amount of its gross profit from its video product, even though they say that they're getting closer to a point of indifference. So each company, while they want to plan for that digital future, they would be better off doing it from a position of generating the near-term cash flow. I'd also point out, and I think this is a point that perhaps Julia made before, if each, this is only the start. So if these two sides do not reach an agreement, it has implications for the bundle across the board. Now,
let's see if this starts to become a bull flag, guys, right over top of VWAP. See if this is starting to become a bull flag.
Priced $20 to $25 less expensively than Charter's video package when you look at their ARPU. And so that is a point that shouldn't be overlooked when you think about whether or not Charter would be willing to come back to the negotiating table.
Right. So we just took a look at your buys. Are any of them at risk? Are you considering ratings changes, whether it's because of Charter or the ongoing strikes?
We certainly always consider whether we need to make ratings changes and what's at risk. What I would point out about the media industry is it has been a very disliked industry for an extended period of time, and valuation multiples on the business is traded at discount. And that reflects the expectation that these companies will be under pressure. And we haven't talked about Netflix, but we still see Netflix as an incredibly strong company that spends a meaningful amount on its content, and it uses it to distribute content directly to the consumer, which means more money spent by the consumer makes it to Netflix and makes it to the content owner than it does in a traditional bundle. If you look at the traditional media companies, they spend substantially similar amounts on content to what Netflix spends, but they're still beholden to a legacy model that is under pressure. We believe it's very important for those companies to aggressively establish both the right level of spending and a streaming first product that helps them sort of move across this divide. Now, this in the near term looks like pressure, but it could just be the catalyst that forces them to be more aggressive and more disciplined in pursuing that streaming future.
It's obviously fascinating, even to those who don't work in the business. Michael, thanks. Good to see you. I appreciate the help there. Speaking of Netflix, it is one of the top gainers on the S&P today, along with Tesla, as some of these price cuts in China appear to be bearing some fruit from a sales standpoint. We'll get more of the new top picks out of Goldman in a moment. Stay with us.
I want to see if we can reclaim all this stuff, guys. Watch the cues. I don't know where the cues are right now. Actually, I do. They are positive, so the cues are positive. So there we go. All right, let's see what AMD can do. So start seeing that, and then where's the Dow? Right. You have Airbnb also. Airbnb should be strong. It's up 8%. 4% on Tesla.
Welcome back to Squawk on the Street. Carl was just mentioning the strength we're seeing today in names like Tesla and Netflix. Well, the NASDAQ 100 just popped into positive territory. The NASDAQ, broader NASDAQ composite is still negative, but things have improved, and the S&P is only down about 0.25%. You've had a number of sectors turning green just in the last few moments or so. It was just energy. Now it's energy and communication services and information technologies, which is notable that they're staging a comeback, given we're seeing yields on the rise as well. Not necessarily always see that relationship intact. Again,
We just saw it a couple weeks ago. What are you talking about, lady?
Meantime,
Sarah, with your hair behind your ear.
Conviction list of stock it likes. Dom Chu has the details.
I thought they told her to stop doing that.
Goldman conviction list of top picks is seeing one new
Nah, I'm just playing. I like Sarah. She's a little dork. She's a little dork. But I like her. Let me see here. So this is Tesla on the right hand side.
Underappreciated investment in people and staff, also a bigger exposure to equity.
I'm trying to
capital
think
markets,
here.
which, industry-wise has kind of seen some better trends. So Jefferies, though, down about 2/3 right now. Now, with regard to the deletion, Goldman is.
I feel like we're getting some hesitation as we get up closer to this area.
Its earnings expectations for the retailer post its earnings report. Macy's shares, though, on the climb right now, down about 40% year to date. Now, as for where you could still see the most upside, the three stocks that are still on the conviction list that have the highest implied upside targets. Now, the company formerly known as Weight Watchers.
Gotta watch the 50-day, guys. I would just stay on watch of that 50-day. That's what I would be watching for.
And First Solar with a 57% implied gain. And by the way,
Right, so you can see how you're getting a little bit of hesitation here
on September 7th.
in this consolidation
and the update,
here.
Carl, Sarah, for that conviction list. I'll send things back over to you guys.
All right, Dom. See you in a bit. Dominic Chu.
All right, I'll be right back, guys. I'm gonna go clean her litter. I'll be right back.
Welcome to the third hour of Squawk on the Street. I'm Carl Quintanilla with Sarah Eisen, live at Post 9 of the New York Stock Exchange. This hour, a rough road ahead. Deutsche says we're entering the riskiest period for the economy, at least. And Wolf says the bulls can't have their cake and eat it too. While Canaccord said the road is muddy. Are they right?
Plus, regulators can be heroes. That's what Meredith Whitney is arguing as big banks take a larger piece of the pie and the smaller names are left behind. She will join us.
Senate gets back to work after a 5-week hiatus. From government funding to geopolitics to tech, they return with a lot on their plate. What should investors focus on? We'll break that down.
Topping the tape for us, though, today at Post 9, concerns about September. Number of notes making the rounds on Wall Street today, arguing that the setup for the economy and equities is looking shaky from here. Mike Santoli joins us. We know September is historically a tricky month. How much, though, does it have to do with the turn we're starting to see in the data?
I was going to say the calendar itself, sure. The data are what they are in terms of performance, although it's not been as bad when you've actually had the market up, as you guys have been talking about, 10% or more. So to me, that's one of those things you keep in the back of your mind. There's a chance that the seasonal weakness was all mostly felt in August. But either the turn in the data or just the fact that we're not being able to escape the late cycle backdrop, at least psychologically. And so when you have unemployment down at 3.5%, people have been expecting, the Fed's been tightening for a year and a half. Sure, it's about time to wonder about how much longer the cycle can last. But there's not really a lot you could observe in the numbers that are saying, aha, it's here. We've clinched it. The soft landing is a fantasy. It's not going to happen. Everything, as many have said, that's happening in the numbers, jobs numbers, everything else, is consistent with a soft landing, but also, who knows, consistent with descending into something worse. I think the biggest risk in the near term is that longer-term yields keep going up, and not just because the economy is stronger. And so it becomes this little indigestion problem for the stock market. You're seeing small caps get hit today. You're seeing industrials get hit today on some of that. In general, though, earnings estimates are headed up for this current quarter. And so all that stuff seems to be offsetting. And, you know, in terms of the lags and everything that people are consumed with, it's still a matter of somebody's judgment call on how this cycle maps to prior ones. Like Deutsche Bank talking about this is a dangerous 6-month period. Well, that's just because that's when recessions have happened relative to the first rate hike in the past. Okay, fine. I don't think the first rate hike is the starting point to start counting. It's actually when the Fed starts to cut that you have to start to worry a little bit more. Right. Historically, anyway.
Of the list of exogenous event worries that I'm seeing for September, student loans are going to start creeping up.
Yeah.
UAW. Government shutdown, and then the supply of bonds of all kinds, which you already talked about.
Exactly. Now, all that stuff is absolutely out there. It's right in the middle of the table, and they all push in a similar direction, which is restraint on growth. So we'll see if we started this quarter indeed at a 5% GDP pace. Maybe that restraint is not going to be the fatal blow. Hard to know. I think it is a good reminder, though, that recessions happen when lots of things go bad at once or you get a big shock. It's not just like, well, it's time. You know, you don't just look at your watch and decide it's here.
I don't know. After 525 basis points of tightening,
exactly.
Some people think you do.
But, you know, it's a matter of how that manifests. And so, yeah, I think that's true. Look, I love Jim Reed's chart from Deutsche because on the far right-hand side is the 1983 and 1994 tightening cycles, which were the two engineered soft landings. And if we followed those, no recession until 2029. Because that's how long it was when you finally got a mid-cycle slowdown. I'm not saying we got it, but I think that it's a good debate to you know, that
whether
can
that
be
was
had
really
on either
lags
side.
or not. Well, what did the Bank of Japan say? Lags can be 30 years.
Right, exactly.
All right.
His best line of the
day. Generational lag, yeah.
So good. Thank you, Mike.
Right.
Mike Santoli. Speaking of a slowdown, our next guest expects a U.S. recession to start early next year, though he believes it will be short and shallow and still sees plenty of opportunity in the second half of the year. Joining us now is Principal Asset Management Global Head of Investments, Kamal Bhatia. Principal Asset Management has over $500 billion under management. So what are you exactly positioning for?
Good to be here, Sarah and Carl. So first of all, you said short and shallow. I think Mike was talking about this. I think the Fed needs to turn off the air conditioning now. They have been really helping the economy because it was overheated coming out of COVID. And I think we all expect them to stop this pace. And I think what's been tricky in this economy has been sort of mixed signals. When you look at the labor data, it continues to be extremely strong. But when you look at the macro indicators, the inverted yield curve, and the other statistics you see, they kind of conflict with each other. Our view remains that it's a much more tricky economy to manage, and you need to be a little bit more innovative in managing the risk going into latter half of this year, and particularly next year, where we do see a lot more opportunity.
Because areas of the economy are less susceptible to rates, but others are historically the same?
Yeah, I'll give you a statistic. So we at Principal, we are one of the largest partners for small, medium businesses in America, but also not just in America, all over the world. And one of the things you see is we have this well-being index, and compared to last year, where half of small businesses were growing, 2/3 of the small businesses are growing right now. So you see this enormous momentum on the small and medium business size. But on the large side, you see a lot more headwinds. So what it is it's a lot more tricky. Our view is the small businesses will continue to do well. There is more growth happening there. I think another area we would talk about is this traditional debate between growth and value. You would see momentum going into quality growth in U.S.
So you think the Fed is done?
Well, the Fed is going to pause, and we do think in somewhere around Q1 or Q2.
So there it is. I said that the I said let's watch to see if we were to get a rally back up to the highs.
To get them to cut or no?
Right? See if we get a rally back up to the highs. I don't have much faith in it.
My analogy would be they turn off the air conditioning.
Right? I don't have much faith in it. Look at the volume. Where's your volume at? Right? You still have not. You've had one green candle really match that selling. Literally one. 1.5. I'm sorry. So if I were to draw a line, right here. Where is it? Right.
And that is going to, as you were just discussing, the industrials are going to be heavily affected. That's a large part of the economy. The manufacturing sector is
Where was it? No,
so they
right
do think
here
they're
with
going to look at all those
these.
data points to make this decision.
So does that mean
Right there. If I draw a line right there, what do you guys say? What's above here?
Well, we are definitely wrestling
One.
with the S&P, international.
You got like a little piece there. Indecision candle. Right? All selling. You have this one and that for the buying. Like that's that's it. So I don't believe in this run. This is a low volume bounce back, and that's okay.
Yeah, that's a fair point.
It's all right.
When we talk international, we kind of take a global view. I would say India.
I'll be right back. I'm almost done with her letter. I'm getting her the window, stuff like that. So I will be right back, guys.
Asia, particularly places like
I'll
Vietnam,
be right back.
they continue to
Hopefully
do
I don't
well.
lose people,
And I think
but
there's
I
parts of
probably
Latin America,
will.
particularly Brazil.
If you guys have questions, throw them in the chat. Trying to get some stuff started here.
Continue to do well here.
I'm probably going to do something with sports and the markets at lunchtime when the markets slow down. We're not going to have much of a day today in the markets, I feel like. Abby, please,
I think
please, baby, just
create
stop.
an opportunity. So I think geopolitics is priced into a lot of these stocks. Having said that, I think the rate environment in these markets is a lot more stable than we've had in the U.S.
Brazil's a good example.
Brazil's a good example. I think that stability of rate environment, sort of growth that is steady, creates opportunities for investors. And I think the key thing is, I would argue, just going back to this value discussion, I think there may be value in international and EM, but you don't want to get trapped in the index. What you want to do is find the right opportunities in the right sectors.
If you are expecting this recession early next year, which I'm not sure is consensus at this point, then are you a buyer of treasuries, fixed income? Because that's not really priced in.
I think that's a great point, Sarah. I would say we are a buyer of high-quality credit, and particularly high-quality credit because it has a little bit longer duration. So if the rates do adjust, you get a good risk reward. We also believe sort of speculative credit has had a run-up, and it needs to correct to be more compelling value. But I would say investment-grade credit is very compelling because it has duration lift and the credit is well priced.
Well, I'm told there's a deluge of investment-grade deals coming today, issuance today for starters, and the market's ready for it.
Absolutely.
Kamal, thank you very much. Kamal Bhatia from Principal Asset Management.
Glad to be here. Thank you.
Let's turn to the IPO market today, and ARM revealing some new details about its upcoming debut. Leslie Picker's been watching that all morning. Hi again, Leslie.
Hey, Carl. Yeah, SoftBank-backed ARM is asking for a market cap as high as $52 billion as it begins selling the largest IPO in years to investors today. While that's a discount to where it was valued just last month in a private transaction, it's actually quite expensive when comparing it to earnings of its peers. ARM's non-diluted market cap at the high end of the range represents about 100 times trailing earnings for its fiscal year through March, 100 times. While the comparisons denote different fiscal years, that relative value is about double ARM's chip design peers. Synopsys is trading around 47 times its prior year sales, while Cadence Design is around 52 times. It's more akin to NVIDIA's valuation, actually, which of course has soared more than 230% this year amid hype around its AI-utilized chips. NVIDIA's price to earnings is about 116 times trailing earnings. ARM's revenue declined about 2% in the quarter through June, while its net income was cut in half. Still, the scarcity of IPOs may drive more investors to demand shares, and customers such as NVIDIA, AMD, Cadence, Google, and Intel have indicated interest in buying $735 million worth of the IPO, which implies a smaller float size by about, I think that's about 15% of the total offering size, guys.
Leslie, can you talk about the prospectus and some of their discussion about who's interested in making an alloc or having some of this, a piece of this pie, and who's actually committed?
Yeah, it's interesting the way that it's worded, Carl, because as you mentioned, there is a distinction between indications of interest, which are non-binding, and there's a whole host of corporate customers that they list in their prospectus as being, having given indications of interest in buying that IPO. It's, $735 million worth, but they're non-binding. So this would be AMD, Apple, Google, NVIDIA, some of the other names that I mentioned earlier in the hit. But normally what we see with cornerstone investors, oftentimes when there's a corporate, say Pepsi with the Instacart IPO that's also coming down the pike, we get more of a private placement where it's more of a sure thing that they're going to buy shares at the IPO price. So this implies indications of interest, but these names are on the cover. These are very well-known companies. It'd be hard to see them truly back out of the deal unless they saw a final IPO price that was just way out there. So you can kind of feel somewhat comfortable that they will at least buy a stake, but it doesn't necessarily go into detail about who's firm committed and who is just kind of saying that they're interested but not yet committed.
I mean, it's a big moment for SoftBank, even though, as you said, Leslie, they're retaining, what, 90%?
90%, yeah.
And so, talk us through the investment, because they took it private for how much and when, and this values, what did you say, $50 billion? So they're up a bunch, right?
Yeah, they would be definitely in the money on this investment. They took it private in 2016 for over $30 billion. But, obviously this implies quite a significant increase from those levels. At a fully diluted valuation, it would be $55 billion. Now, remember, they did buy back the 25% that they didn't already own from their own Vision Fund last month. So this is a kind of an internal deal. It may signal something to the market about getting a discount relative to that, because that valuation was $64 billion. But at the end of the day, what really matters, to your point, Sarah, is what they took it private for back in 2016 relative to what it ultimately debuts at, which will be, significantly higher from those levels given the range that they put out today.
I also think that another angle that's sort of interesting here is that they didn't list in the UK, even though this was considered such a national champion, and I would think a black eye for UK IPO market and their stock exchange.
Yeah, there was a lot of discussion about where they would list. London, of course, being a potential candidate there, but ultimately they did decide to list in New York, which we've seen kind of a trend of European companies doing increasingly more so lately. But to your point, being a national champion, its history kind of it was started in 1990 as this very revolutionary company that was creating the designs for these chips that would go in smartphones, which in the 90s was also revolutionary. And so seeing it come, to the United States is definitely noteworthy.
Yeah. Leslie, thank you for all the information on ARM. That was a lot. Appreciate it. After the break, the Senate returns to Washington as deadlines loom on votes for bills related to the budget, childcare, and insurance. We're going to break down what it means for investors.
Plus, TD Cowen naming its top back-to-school picks as they argue it'll be a needs over wants kind of season. We're going to get to some of those names when Squawk on the Street comes right back.
Lancet.com.
Congress back in session with a lot on its to-do list. At the top, the budget with a little more than 3 weeks to come to a deal or risk a shutdown. Our next guest does expect them to pass a CR, but the House Freedom Caucus could cause some drama along the way. Joining us with his expectations for the budget, tech export issues, and a lot more, Raymond James Washington analyst, policy analyst Ed Mills. Ed, it's great to have you. I've seen a lot of people talking about the risk of a shutdown, but that it's not necessarily acute. How concerned are you?
I'm concerned, but I think that there is two things here, Carl. One, there's a path forward. You can do a short-term extension, allow Republicans in the House to complete their work on the individual appropriations bills. Remember, they've only passed one so far. What the House Freedom Caucus doesn't want is a deal that jams them up into the December holidays. So do that, get some funding for the hurricanes, the wildfires in Hawaii, and live to fight it another day. The second thing, and probably more importantly, back in June, we're probably at a 10 if we defaulted on a scale of 1 to 10. A government shutdown for the markets, probably about a 2. If it goes on a really long time, about a 3. So kind of just in terms of magnitude, the market cares less about a government shutdown, and I think there is a path forward here.
Interesting. Raimondo's going to be on with Jim Cramer tonight, talk about her trip. I wonder, is there a sense that it changed the color of the ties right now between the two countries?
Yeah, Carl. So our call all year long was that the Biden administration was trying to de-escalate a lot of things in China, not walking back any of the tech restrictions. This is the small yard, tall fence, national security driven agenda. The Commerce Secretary is supposed to go to China and sell U.S. goods. That's what she did. There was a contentious meeting, we hear, with their own Minister of Finance and Commerce, MOFCOM, but I don't think that's going to deteriorate the overall relationship. What we still need to get are the tech restrictions that the Biden administration put out last October. We probably get that in the next week or two. That could be headline negative for semiconductor, semi-cap equipment, and that, I think, is what market participants really fear right now.
Should we be talking more about Trump? I mean, latest Wall Street Journal poll getting headlines saying that support for Donald Trump nationwide now up to 59%. Another headline that the poll finds in a 2024 election test, Biden and Trump are tied at 46%. I know it's early. We don't know who the nominee is on the Republican side, but considering he came out recently and said he's going to impose a 10% across-the-board tariff on foreign imports, I feel like investors have been fooled before on this.
Yeah, Sarah, it's an important point. So at Raymond James, we put out our election preview last week. And what we said is that the most likely scenario right now is a rematch of 2020. You usually don't see these level of leads in a primary, and that person does not end up getting the nomination. So I think in September, we're going to focus once again when at the Ronald Reagan Library on the 27th, there's the second Republican debate. Does Trump show up there? Does anyone start going into his lead? Absent that, in that head-to-head matchup, incumbent presidents usually win re-election unless there's a recession. So a lot of those focus on economics are going to loom really large in 2024 because you can go down the list of all of the issues post the election that are really important. You mentioned tariffs, there's taxes, there's regulation. It's endless how important this election will be.
Finally, on a specific area of regulation, I wonder, I know you've written a bit about cannabis and this HHS proposal on designation. I've seen some desks say that that move alone, the request, was groundbreaking. How important is it, and what could it lead to, do you think?
Yeah, so the HHS is going to recommend a descheduling, or not a descheduling, a rescheduling from 1 to 3, which is opening up potentially more medical research and allowing for Congress to potentially pass what we know as the Safe Banking Act. There's been a lot of false hope for this before. This is a movement that would probably expand out the availability of cannabis in the United States. Does it get federally recognized through legislation? That seems unlikely. The most likely scenario is something that makes the transactions and the payments and the banking and maybe capital markets more legal than it is today. That's why I think that's important.
Yeah. Well, the stocks certainly reflect what a hard slog it's been on regulatory change. Ed, it's going to be a fascinating month and fall. Talk soon. Thanks.
Thank you, Carl. Thank you, Sarah.
Later this hour, a roadmap to bank consolidation in the U.S. Meredith Whitney making the case for why regulators can be the heroes that the sector needs right now.
Watching Airbnb and Blackstone today, they're higher after the S&P announced that some reshuffling will see both names join the S&P index before the start of trading on the 18th, replacing Newell Brands and Lincoln National. Stay with us.
Welcome back. Time for the story abroad. We're going to start with the European close. Stocks are in the red, but well off session lows. Energy among the big winners there, along with material stocks on this bump up we're seeing in Brent crude oil prices. Novo Nordisk, here's a headline, dethroning LVMH as Europe's most valuable company thanks to Wegovy and Ozempic weight loss drugs that it manufactures. On the data front, Eurozone business activities dropping at the steepest rate in nearly 3 years. Abroad, Australia holding its benchmark interest rate for the third straight month. And of course, we can't talk about global without talking the recent data out of China. The service sector recording its lowest expansion since December 2022. The key from abroad fell for the first time in 2023. One bit of positive news, though, out of China. Country Garden, which has been the worry du jour, did pay its bond coupon narrowly. We could talk about any of these stories, but I think we have to pause for Novo Nordisk because I guess the more than Dior and Louis Vuitton is the weight loss drugs. And apparently the latest catalyst here is Wegovy, its miracle drug, hit the British market, the UK market. It's going to be available by prescription from NHS and also for purchase. This is a stock that has tripled since the end of 2020 on these blockbuster results of these drugs.
We had the CEO on last week and just talked about culturally what it means for. He's worked there for decades. Since he was a very
All right, guys. Sorry about that. I was cleaning her litter box.
the Danish and
It doesn't seem like there's much going on today. The S&Ps are sitting here. The low of the day,
I believe it. I mean,
449.
player in the insulin market.
449.16 area, so call it 449. And the high is 451.
Apparently there's already wait lists at some of
So
these
you
private
made
pharmacies.
a $2 move.
Thousands and thousands of people.
All right, you made a $2 move. So not much going on, just like we thought. At least this is what I thought coming into the day.
Good morning. The impeachment trial for Republican Texas Attorney General Ken Paxton began this morning. The GOP-led Texas House voted to impeach Paxton back in May. Now his counterparts in the state Senate will decide whether to remove him from office. Paxton is facing several
Let's see
accusations,
here.
including bribery and the abuse of public trust. President Biden announced today Jack Lew is his pick to become the next ambassador to Israel. The president tapped him for the office as tensions between the U.S. and Israel rise over Prime Minister Benjamin Netanyahu's judicial shakeup. Lew served several roles in President Obama's administration, including Secretary of the Treasury and White House Chief of Staff. And Chinese police detained 2 construction workers they say made a shortcut through a centuries-old portion of the Great Wall of China so they could get to work faster. Police say the caused irreversible damage to the wall, which is a UNESCO World Heritage Site, Carl.
Silvana, thank you. Silvana Hanau with the news update. Still to come this morning, TD Cowen's channeling its inner parent and asking, do you really need it? Laying out its top back-to-school picks.
That's crazy. That's so crazy.
And then we're watching Next Gen Healthcare. Thoma Bravo reportedly near a deal.
Let me see. Not sure when you sent this. Let me see. It needs something because Roblox has just been getting worked. Roblox has been getting worked. I gotta make my little girl a vet appointment. I gotta do that today. You okay, love bug? Are you okay? Oh man. My little girl getting hers getting old. Yeah, there was a nice pop today on it. Sorry, I just got this. So me leaving the stream and stuff I know doesn't help, but I do apologize. And that was her smacking my mouse in my hand with her tail. What was the news? The news was Combat bots ghosting stuff. I see a price upgrade. No, that was back in August, 9/1. I don't see anything for Roblox. I don't see anything. But Roblox is an AI trade, that's for sure. There's something for BLRX. I think. BLRX. I know it sounds weird, but like BLRX, which is like quite the opposite of Roblox.
NSM Insmed hitting new highs now, 2668, up 18%. That's Indian River Sandy.
Man, I might take a shot at this, guys. Hold on. I can't just sit here and look at that chart and say, yeah, I'm going to take a shot at it. So I'm going to watch for this level here on the SPY. 450. 450.10.
Cowen's back-to-school picks are grabbing our attention.
Let's see
Maybe
here.
to Walmart, Kohl's, and Ulta as the names to own as consumers prioritize needs over wants going
I know industrials were doing pretty well today, but they have fallen off. All right, so 316, Austin 316 is a level. I really don't want to reiterate to buy on BioLine. So there's a price target upgrade scheduled. So there wasn't any news on this. Actually, there is no news.
And Ulta's a great example there. At Walmart, we like the grocery exposure, and this company is benefiting from inflation. What we look for ahead
I feel like I should just wait. I feel like I should wait and be patient and just pick my spots. I feel like this thing could just go up all day, guys. I do. If you get a pullback, I feel like it can probably just work itself all the way up. Or, you know, just work itself to the upside throughout the day. AMD, it came back, recovered the 100-day moving average. I feel like it's trying to make that 109.50 resistance, okay? What do I mean by that? Right here. So we got a couple things going on with AMD. Alright, a couple things going on. You know what I mean? You have this rally, pullback, rally, pullback, rally, pullback. This just bull flagging. Right? Makes a new high, pulls back to the previous high, makes it support. Right? Right here.
That's been under pressure too. So our call here is really thinking
75. Right? You pull back, hell, all the way down to 60. $15 pullback, rally from $60 up to $88.50. Pull back to 75. Right? And what was the previous high? 75, 77.61. So, you know, you can just see it here. Rally, pullback, rally. It's just holding the previous highs, and that's a strong stock. And here you are again. It held 100. And now we're rallying. So are we going to test the 100-day moving average? Let's look at this. Let's look at this, okay? So, because you need to also add in the S&Ps. Again, it could have news and it could separate itself from the markets, but
home decor and pets. Those have been very popular relevant categories too.
oh, my little girl. She's got me so worried.
Yeah, he has a background from off-price from Burlington as well as traditional department stores, and he's going to really leverage that to drive more speed.
So what do we have? We have a 100-day moving average, 50-day moving average, stuck right in the middle. Stuck right in the middle. You have some really nice support, which is now resistance at 109.50. So for now, until 109.50 breaks, you know, you want to watch for a pullback. You want to watch for a pullback up at 109.50. All right. Why do I say that? Because there's 1, 2, 3, 4, 5, 6, 7, 8. You broke it, and then now it's retested. All right, it is has retested it. All right, 1, 2. Well, not really that, but 3. Jesus Lord.
The consumer who's shopping for what they need, whether that be
Right there.
products as well.
See what I'm getting at? This 109.50 is 109.30, 109.50. It's an area. All right, that's where it's at. And there goes the SPY.
There is cautious optimism in terms of
Just really nice. I guess a nice trading range. I can't get in on this. I just don't see anything. I really don't. Unless we can get a nice bounce here. This would be a really nice bounce. You have VWAP. A lot of things lining up for another bounce higher. I would watch the Qs, right? The Qs are leading the day. So the Q's going to lead the SPY. Tech is going to lead the SPY. All right. It is green. SPY is 1/4% red. The Qs are flat.
That should be easier for management teams to really control their supply in the face of uneven
Right, so the Qs are green. even though it says here that they're red. I don't understand. So then it should be down here. That makes no sense. What's going on here, guys? Thinkorswim, what do you got going on? What you're saying we're down 0.5%. I don't get it. I don't understand. From Friday's close or on the day? I don't know. I don't know. So initial morning highs are holding. C3AI reports Wednesday. I know. See if this area becomes resistance now. 377.75. I think we need news, guys. I feel like we're gonna need some type of news to get us going in a direction, because there's literally nothing to get us moving. I mean, you know, we don't just need like news. We need a reason to move. We need a reason to go higher. We need a reason to go lower. HSDT. Let's look at that one. Who here had a great weekend? Who here that is not here had a great weekend? The whole 2 people that are here. Alright, so what I'm going to do is I might wrap it up. I'm going to come back with a sports show. I'm going to get all that prepared. It'll probably be around 12:30, 1 o'clock. We shall see. If you want to come join us, come join us. I will see you guys on the flip side. I'm going to leave this up for a few minutes. I'm taking it easy today. I'm not taking it easy as in not doing anything or not getting anything done, but I'm not wasting my money. There's already been a switch on E-Trade to Morgan Stanley. They've already robbed me for money. So this is a small amount. Maybe they didn't. I don't know. Maybe it was from my loss on Friday, but could have swore I had more than that, but whatever. That really looks. Let's see here. I wish I was comfortable in saying that this could be a small, low volume pullback to go long at 449.86, but I don't know. It's a beat up cup and handle.
Welcome back. Let's get to the financial sector.
I mean, who can not argue that the reason I don't think that this is a cup and handle is the way the candles are, right? So if I were to pull this in, man, I wish I had the other cup and handle from Apple that I could show you guys. The price action doesn't seem like it's there. What do I mean by that? The size of the candles aren't the same, and there's a lot going on with it. So like, you know, like here, it's like you have these 2 small candles, 1, 2, a really long one, and it's small. Like, it's just, we'll see. The volume doesn't seem to be there.
Decrease their lending. And what does that mean to their overall system? So the 14 banks control roughly 60% of the FDIC deposit and lending market. The now 34 banks control 75% of the U.S. FDIC deposits and assets. And that means then 75% of the market is going to contract or continue.
People are going to lose access to credit.
Alright, I'll be right back, guys. I'm watching that right now. HSDT on the watch, but it's got some selling in it. CRM. Come on. Maybe that was my shot to get on that short again. Not sure though. It's not CRM's just not giving us any follow through, and I don't like it. I'm gonna run through charts. And
what I did in this report is talk about what's different today, right? So there's no existential credit threat because credit has moved out of the system. And for the smaller banks, and I picked the best small banks to be the consolidators within this industry, and they also, interestingly, they're very well executed. They've all done M&A before, so they all have the skill set to do M&A and integration successfully. They all have high loan to deposit ratios, which is the opposite of the top banks now, and will be the progression of the new 20 banks going forward. And they're positioned exactly where the U.S. growth is. So every 60 years in the United States, for the last 250 years, you've had regional growth. So you think about the Industrial Revolution being the Northeast, banking centers developed within the Northeast. You think of the Power Revolution, banking centers developed along the Mid-Atlantic and further out to the coal regions in the West. Then you look at the manufacturing revolution, and you've got banking hubs in the Detroit area throughout the Midwest. And then you have what I call the leverage revolution, which brought everybody to the coast. That was the housing revolution and the leverage revolution. That was our last economic revolution. What is clear today, the new economic revolution is clean energy, reshoring manufacturing, and demographic migration. And that's happening in the South. So you look at the GDP growth numbers of the South, they dwarf the coasts and they are dwarfing the North. And so this is where banking hubs should be. So the six banks that I chose, or 5 banks that I chose, all have strength and all have diversified earning streams, diversified lending bases, and diversified state concentration. So these are the natural, so regulators will look like heroes because if they allow these banks to consolidate and get bigger, get economies of scale, keep pricing down, keep lending inside of the FDIC regulated banking market, which is safer for everybody, you're naturally progressing to where the next regional hub of banks should be.
So they'll be buyers.
I'm just listening to her, guys. That's all.
They've been buyers.
All right, let's see if we start to get a bounce here. You're getting a lot of order. You're getting that green.
Sure. So you've got Bank of Oklahoma. You've got First Horizon, which, by the way, TD and First Horizon pulled their deal. You have Synovus. You've got Ozarks, and you have Pinnacle Bank. So these banks are either in Oklahoma, but Bank of Oklahoma has got a big stretch into Texas and throughout the West, but primarily Southern. Pinnacle has a great market share within Nashville. Nashville has outgrown most of the country, as has Texas. There's been no comparison to Texas. Actually, the Texas banks, the regional banks, are, to me, not as compelling as the banks that I've identified that already have activity in Texas. And by the way, the big banks are in Texas. They're in these areas. So there's no threat of taking away their customers. Actually, they would encourage this because for every AT&T and Tesla and they're the massive companies that support those infrastructures, and those are who banks with regional banks. So the tone can change, and the regulators can be responsible for strategic growth, for economic acceleration, and a really sound banking system.
But the question is, how realistic is that? Because the Biden administration hates corporate consolidation.
Well, it's hard to imagine. None of these banks have over a 50% market share of deposits or 100 basis point market share of deposits or assets. So actually, I would think the Biden administration and all the regulators who are trying to walk within the lines of guidelines of the Biden administration this is actually accomplishing that mission because this is increasing regulation. You can't argue that companies with under 1% market share of the total system are going to be in any way a competitive threat where you have 75 of the market already.
We might start getting a short squeeze on MSOS, guys. It might be coming.
Are the banks really looking for deals right now? Because we're in a period where a lot of them are worried about credit conditions. It's already been tight, and they've been preparing for tighter regulation and higher capital ratios, and we just got off this regional bank crisis. Is now really a time for them to be out shopping for deals?
I think absolutely, because banks, expenses have gone up for all banks, from compliance and also technology. It's incredibly expensive to invest in
Wow,
technology.
it's up 19%, guys. You gotta be shitting me.
Banks always want to consolidate, but
You gotta be shitting me.
has been particularly
Look at this.
TD for Verizon.
Holy cow.
Have gotten longer and longer. It's been discouraging.
Where are we
But
headed?
This is where the regulators can really come in and provide a smooth path for consolidation.
Man, I did. I'm not gonna sit here and say I knew it, but I hate to just. I hate to miss out on a move like this. I mean, we were down a few, like you were down to a few dollars, and it's like, wow.
Have you pitched this to FDIC or Treasury?
I have consistently. Actually, I have for the last 15 years.
Maybe someone's watching there today.
Well, I think now I'm going to get a lot more aggressive with pitching. So before, it was a different scenario, and I think now there's more of an interest than ever. And remember, I live in D.C., so I've got plenty of time to talk to regulators.
All right, Meredith, thank you very much. I'll come in here to Post 9 to pitch the idea as well. Meredith Whitney of Whitney Advisors.
Coming up after the break, from cash burn to Burning Man, San Francisco's got to be happy. The latest talks about mass exodus are not focused on its city. That's coming up next.
Micron share spiking on that.
I'm not sure what that news was, if you guys got it or not. Wonder how many people just went long there on MSOS. Micron MEU. I'm gonna go make another cup of coffee and then kind of figure out what the hell it is I'm gonna do today. I gotta work on this newsletter. If anybody can help me with PowerPoint or taking some PowerPoint class, like some education, let me know. Let me look online. Might do a football show here in a little bit. Go over some of the lines, some of the early lines. What did we see this week? Maybe we can call in, get some stuff going. I think it's a price increase, guys, on Micron, it looks like. Analysts.
Asset.com.
You may have seen the images already. Thousands of stranded Burning Man attendees finally making a mass exodus from the festival after intense rain this weekend flooded the campsites and caused a lot of foot-deep mud. Our Kate Rooney has more on the story, and it's the tech check for today. Hey, Kate.
Sure is, Carl. Good to see you. So over Labor Day weekend, some people, they're heading to the beach or the U.S. Open. Others, especially a tech crowd here in the Bay Area, make the voyage to Burning Man. The countercultural festival attracts artists, celebrities, and more recently, tech moguls and investors. This year, the desert in northwest Nevada, where this is held, saw torrential downpours, normally pretty pretty dry lake bed turned into what some were describing as a muddy bog. They said it was a foot deep. The event organizers told some of the 73,000 attendees to shelter in place and at one point shut down the exits. I caught up with tech investor Sheil Manat, who's been going to Burning Man since 2010. He actually got married at the event this year. You can see he told me after getting over the, quote, mini panic attack of being stuck, most people just embraced it.
It was definitely not a Lord of the Flies situation. I would say quite the opposite.
So some decided to just try and escape despite those road closures, including DJ Diplo. You can see there comedian Chris Rock as well. They posted a video saying that they hitched a ride in the back of a pickup truck with another Burning Man attendee. And while the event attracts artists and creative types, it is really known for bringing in this tech and business elite crowd, which might have something to do with Burning Man's Bay Area roots. It was founded here in San Francisco in the late 80s.
Franciscans go, and San Franciscans are disproportionately in tech. So I think that started. And then, you know, you hear stories about, and you see like Larry and Sergey from Google, like you see them out there, Elon Musk, you see out there. So all these folks, I think it became like kind of a lore that when Larry and Sergey hired Eric Schmidt, they talked to him about Burning Man. And so it just became more in the norm in San Francisco than elsewhere.
Definitely more in the norm. And speaking of Elon Musk, guys, the event normally doesn't have internet access, but this year used Musk's Starlink so that people could access Wi-Fi and get in touch with family members during all this flooding. Back to you.
It has been a mess. Kate, thank you for that. Kate Rooney. Coming up after the break, the battle between Charter and Spectrum continuing. Customers still without ESPN. The NFL season just days away. Latest on those negotiations in a moment.
negotiations with Disney over a carriage agreement for its channels, including ESPN, which is impacting more than 14 million Spectrum customers. The battle could have big implications for the future of cable. Julia Boorstin joins us with the latest. So where are the two parties right now, Julia, and what's at stake?
Well, right now they're still at an impasse. Disney and Charter are continuing their battle and continuing their negotiations. And for now, Charter's nearly 15 million subscribers remain without access to Disney's channels, including ABC and ESPN. That means that this weekend they've missed out on the U.S. Open as well as college football. And now both sides are appealing directly to consumers. Last night, Disney launched a new consumer-focused campaign to push people to its own TV bundle, Hulu with Live TV, which of course includes ESPN and ABC.
All right, I feel like we got the S&P's got to hold this level. If they don't, then bye-bye. Bye-bye. All right, you're holding VWAP right now, but it feels like it wants to start cranking. But again, you have a slight head and shoulders there. If you start getting an increase in volume, sorry, I'll turn that down or off, one of the two. See, you see how we're struggling here, guys? You got to hold VWAP. Right now, we're above VWAP. You have a slight head and shoulder, or not head and shoulders, but a slight cup and handle here, double bottom. It's an ugly cup and handle. Like, I don't understand if this would be a cup and handle. I don't know, because my coffee cup does not just come up in the center and, like, you know, have coffee over here and coffee over here, and then it's just like what? Because this, if you were to drink out of this, well, if this was the handle, and you tilted it like to me or to you, you see what I'm saying? It would just like go in your mouth. Obviously, it wouldn't. But if you know, it feels like if it were to go this way, right? If it were to go this way and the water come out that way, then this is falling into this, and then it's just making a whole mess over here. So maybe that is our sign that this is not a cup and handle, and that we should short the piss out of it right now. Right? Short the piss out of it right now would be my call, but I'm not telling you what to do. You know, I'm not doing anything. All right, I'm not doing anything. I'm probably getting ready to start this little sports thing. Talk about the sports weekend. Let's see what happens here. I will, like I said, guys, this VERB2 is just done. There's nothing really on the radar. MSDT, like, it's lunchtime now, so, or look, and then it decides to go, doesn't it? So what I want to see out of this, oh, of course, it's ended.
SWBI.
Let's get to the judge.
Carl, thanks so much. Welcome to the halftime report. I'm Scott Wapner, front and center this hour. The month ahead for stocks, what it will hold for your money after a volatile August.
Come on. Sorry, guys. I'm trying to get shit back on track here.
As we get back to business in September here, take a look at stocks. Dow's negative. We've been pretty much negative for the session. You know, Jenny, September's historically weak. We know we're coming off a bit of a pullback in August, though. The way that the month finished off leads you to believe that the momentum isn't lost. In fact, it may be found.
All right, there's nobody watching this, so
we might go here.
Well, I think we're still stuck in a range, right? And I think that's where we're battling with the emotions of feeling better about things because
I don't know. I got a cup of coffee going. I'm gonna work on this. I'm gonna work on this, guys. I'm gonna go work on this stream. I'm gonna do a sports stream here in a little bit. Thank you guys for joining us. You guys have a great rest of your day. I will be posting